Ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the dollar versus yen, so let's get started. As we head into the afternoon session in the U.S. and as London and European traders head for the exits, we can start talking about what is up from a technical perspective and what might we expect next week for this currency pair. And if we take a look at the price action this week, the first thing that sticks out to me is this high price right here. This high price got within 3 pips of the 2022 high. I'll go to the daily chart, take a look at the 2022 high. It was up here at 151.938, and you can see the high price in the trading this week got within the smallest of margins of that level. That high, by the way, was the highest level going back 32 years. So it got within 3 pips of a 32-year high. Pretty impressive, but also pretty significant that we couldn't get above that level, and we saw the price rotate to the downside. The move to the downside saw the low on Wednesday reach down toward the 150 level. That's right here. We got to within 4 pips of that, and then saw a snapback rally as well. Why? Because the 150 level, remember, was a key level that traders were thinking that the Bank of Japan would intervene, and we spent all this time since then above the 150 level. But this time on the way back to the downside, we found support buyers. Price moved back to the upside. In trading yesterday, we couldn't get above the high price from Wednesday's trade, and that started a rotation back below the 100-hour moving average. And you can see the last thing that we did here before moving sharply to the downside was find resistance against the 100-hour moving average in trading yesterday. Push below the 200-hour moving average, push below this swing area right through here, 157.18, on its way to a low somewhere near the 150.30-ish type level before rebounding back higher and finding resistance sellers once again against this swing area through here with a number of different swing lows and swing highs stalled or either provided resistance or support going back in time. So that was a nice little hold there, and it sent the price lower in trading here today. We saw the dollar versus yen really gain momentum all the way to the downside, and what did we stall? We stalled right against the low price from from the month of November, as a matter of fact, down near the 149.17 level, and a trader said, "No, we've had enough," even though this was quite a big move to the downside. So they caught a falling knife, and the price has since rebounded back to the upside. So what next? What are we going to look at going into next week's trade? Well, the first thing we're going to look at and pay attention to is a 150 level. More specifically, I'm going to look at this swing area between 150.04 and 150.14-ish right through here, as long as the price can remain below this area right here and below the 38.2% retracement of the trading range this week. That would keep the sellers more in control. So we could see further corrective move up toward this area, but I expect sellers somewhere in here to lean against the old swing area through here, also the 150 level and the 38.2% retracement. So be aware of that. On the downside, if the price were to hold this area right through here and rotate back below the low price that we saw this week and going back to the November low, that would open up the door for a move toward the low price from October, which came down at 148.79. So be aware of those dynamics, watching this level, watching this double bottom down through here. That's how the pair is shaping up from a technical perspective as we head into the new trading week. Let's switch to the daily chart here, and what we see here, remember the double top up here at 151.93. When you have that double top, you have fears that maybe this is the start of the corrective move lower, and indeed there is room to roam because this pair has been trending fairly steadily to the upside all the way since the beginning of the trading year. So we'll be watching the low prices from the month of October through here near 148.68. If we get below that level, we'll start to look toward these lows, which came in at 147.26, and then way down here is the 100-day moving average of 146.49. Those are sort of the longer-term perspective moves that would have to levels that would have to be broken if the sellers are to take more control. But remember, we're still well above the 100-day moving average now, and the price has been above that 100-day moving average going all the way back to this day right through here, where which is goes all the way back to April of this year. By the way, look at the each times the price has tested the 100-day moving average since that break above the 100-day moving average here once, twice there, another time here. We got close to it here, but haven't been really near it since that time. So do we have the oomph to get to the downside? Does this dollar selling continue in next week's trading? Do we see lower interest rates perhaps helping to push to the downside? Or do we see Bank of Japan come in and start to threaten to potentially move up rates or take away some of their stimulus? Those are the stories that would potentially see the dollar versus yen give up some of its gains and move back down toward the 100-day moving average. So there you have it. A look at the dollar versus yen. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.